Lockheed Martin, a company that is famous for their military aircrafts and has returned a lot of profit for their loyal investors over the years. But is this still a good buy today? Stick around to find out. How's it going, everyone? Hope you're all doing well. Stock Ninja here, bringing you episode 15 of Who Beat the S&P 500. In today's episode, we will look into the world's largest defense contractor, Lockheed Martin. Let's get right into it. Lockheed Martin was founded in 1995, a mere 25 years ago, on the heels of the merger between the Lockheed Corporation and Martin Marietta, with Martin Marietta Materials being spun off as its own company not long after. Since its inception, Lockheed Martin has been one of the largest companies in the aerospace, military support, security, and technologies industries. That being said, let's see just how much money you could have made if you had invested in this company over the last 20 years. Had you invested $10,000 into Lockheed exactly 20 years ago, with dividends reinvested, you would have a phenomenal total of $220,431.42 versus a $31,960,072 of the S&P. That's a 2,102.81% total return, crushing the returns of the S&P's 219.5% by nearly 10 times. That comes out to an average annual return of 16.72% versus a 5.98% of the S&P in the same time frame. Lockheed knocking it out of the park the last 2 decades and really accelerating as of the last few years. If you're enjoying the content, don't forget to destroy that like button and subscribe to the channel. Also, hit that bell notification so you don't miss out on any new videos. Lockheed Martin currently has a market cap of around $110 billion and trades with the ticker symbol LMT. Lockheed is listed within the industrial sector with an industry focus of aerospace and defense, and is a member of the S&P 100 and S&P 500 indexes. With the quarterly dividend distribution, Lockheed is currently yielding a solid 2.45% with an annual payout of $9.60, and the payout ratio stands at a healthy 39.67%. Overall, very solid numbers. When looking at their dividend growth, we can see a nice 18 years of consecutive dividend increases and a 10-year CAGR of 14.42%. Lockheed looking strong with a double-digit dividend increase annually and about 6 years shy of becoming a dividend aristocrat. Finally, when looking at their dividend safety score on SimpliSafe Dividend, we can see a solid 84 out of 99, which they consider to be very safe. Lockheed will be a good fit for a dividend portfolio as well as a growth portfolio given the increase in stock price coupled with the dividend safety and growth. Lockheed's fiscal year runs from January through December each year, and in the fiscal year 2019, they generated approximately $58.8 billion in revenue. Revenue has been on a steady increase the last 4 years, averaging a double-digit growth of 10.29%. Definitely headed in the right direction, which is always nice to see. Let's see how their revenue is broken down by operating segment. Lockheed Martin currently has 4 main operating segments: Aeronautics, Missile and Fire Control, or MCF for short, Rotary and Mission Systems, or RMS for short, and Space. Their aeronautics segment is by far the biggest, bringing in about 40% of overall revenue, and a large portion of that is from their F-35 program. This segment focuses on the research, design, development, and every other aspect involved regarding advanced military aircraft, including both manned and unmanned vehicles and related technologies. This segment also houses the famous F-35 fighter jet, which they have a huge backlog of orders for going well into the future. Overall, the aeronautics segment was up 12% year over year in fiscal year 2019. Next up is the Missile and Fire Control segment. This segment provides air and missile defense systems, logistics fire control systems, manned and unmanned ground vehicles, and energy management solutions. This segment brought in approximately 17% of overall revenue in fiscal year 2019 and is up 20% year over year. Next, we have the Rotary and Mission segment. This segment provides designs, manufacturing, service, and support for a variety of military and commercial helicopters, as well as ships and submarine mission and combat systems. The Rotary and Mission segment brought in approximately 25% of overall revenue in fiscal year 2019 and was up 6% year over year. Lastly, we have the space segment. This segment deals with satellites, space transportation systems, and strategic, advanced strike and defensive systems. This segment is responsible for various classified systems and services in support of vital national security systems. The space segment brought in approximately 18% of overall revenue in fiscal year 2019 and was up 11% year over year. As far as revenue is concerned, all of their operating segments are showing nice increases to their sales. And if we take a quick look at their profit margins by segment, we can also see nice increases as well. Overall, I'm definitely liking what I see here. Lockheed fell a substantial 72.3% during the dot-com bubble crash, dropping about 22% more than the S&P's 50.41% decline. The S&P doing much better here. During the Great Financial Crisis, Lockheed fell 52.37%, about in line with the 57.61% decline by the S&P. Lockheed doing slightly better than the S&P during the Great Financial Crisis. During the downturn in 2020, Lockheed fell 38.89% compared to the S&P's roughly 35.59% decline, and has since been steadily recovering, but not nearly as fast as the overall market, nor nearly as high. Overall, nothing crazy in terms of recession performances. The company is clearly susceptible to drawdowns, but seems to have a knack for bouncing back and making new all-time highs. Will this be the same in 2020? We will have to wait and see. Headquartered in Bethesda, Maryland, with around 110,000 employees worldwide, Lockheed Martin is currently led by CEO James D. Taselt, who has just succeeded former CEO Marilyn A. Hewson in June of 2020. Hewson will remain at the company as executive chairman of their board, while Taselt will assume the president and CEO leadership roles at the company. Taselt will be leading a senior leadership team of 17 members. About half of them have been with the company for more than 20 years, and the other half is relatively new, joining just a few years ago or shorter. A solid mix of Lockheed veterans and new faces. As the CEO position has just changed hands, I thought it would be fun to compare Hewson's performance in Lockheed during her tenure to Taselt's performance at his former company in the same time frame. Hewson led Lockheed Martin from January of 2013 till June of 2020, with the company rising an excellent 322% during her tenure. In comparison, Taselt was CEO of real estate company American Tower Corp, and during a duration that was 3 months less, he led the company to a solid 185% increase. Seems like Taselt is more than capable of leading Lockheed. Looking at which institutions own Lockheed Martin stock, we start off strong with Wellington Management owning a 4.09% stake in the company at 5th place. Next up is Capital World Investors, who we have seen before in previous episodes, in 4th place with a 6.16% stake. In 3rd, we have the ever-present BlackRock with a 6.59% stake in Lockheed, and in 2nd, the Vanguard Group with an 8.32% stake. Now for 1st place, if you had guessed T. Rowe Price, you would be wrong. It's actually State Street with a huge 15.11% stake. Nearly double that of Vanguard, State Street owns an insane $14.3 billion stake in Lockheed. Clearly, they must be extremely bullish on them or are using their stake as a core holding in their various funds. Now, let's look at some risk factors when investing in Lockheed Martin. As the company is the world's largest defense contractor serving many different countries, due to this, Lockheed will always be subject to geopolitical risks. Also, with the US government making up 71% of total sales in 2019, 61% of which coming directly from the Department of Defense alone, Lockheed can be hurt if there are any spending reductions by the DoD, government shutdowns, or change in funding priorities. In my opinion, Lockheed Martin is a cash cow and has the full backing of the United States government and the Department of Defense. As long as national security is a top priority, Lockheed will continue to prosper. Their dividend numbers are solid, and I'm expecting that to continue to go up, especially with the coveted dividend aristocrat status within sight, though still a few years away. Management looks strong, even with the change in CEO this year. Taselt, who has taken over, seems to be more than capable, especially when considering his track record during his tenure at American Tower Corp. Taselt will also be surrounded by Lockheed veterans and the former CEO Hewson, who will still be at arm's reach as chairman of the company. I currently do not own any Lockheed Martin stock, but it does look pretty enticing, especially for my style of investing and current portfolio. Definitely something for me to think about. That concludes our analysis of Lockheed Martin. Thanks for watching, everyone. Let me know what you think about the company in the comments below. If you made it thus far, don't forget to subscribe to the channel. It really helps out. Till next time, Stock Ninja out. I am not a financial advisor, and this video is for educational purposes only. Please do your own research before buying or selling any stocks seen in this video.